When does trading become gambling? Okay, this is very fine line. Trading can be trading and a business, can be trading can be just trading and a business.
Okay.
For me, it's a business, right? But it can also be gambling, and I see so many people who take trading as gambling. For them, the mindset is that of gambling. So, what's the thin line? There's a very thin line. I maintain that most traders are gamblers. They use market as a substitute for a casino. Here are some of the signposts that you have crossed the line. If you enter trades without a clear trading plan, you might be a gambler. For me, whatever trade that I enter, trade that I enter, I have reason to enter into that trade.
Okay.
I do not just enter just because I feel like. There has to be a whole thinking, whole process, a plan, a strategy, only on the basis of which I enter into a trade. Second part is I have a clear exit plan that okay, ऐसा हुआ तो ऐसा करूंगा. If this happens, I'll do that. So I have plan A, B, C of exit. If I make profit, this is when I exit. If I make losses, this is when I exit. Or after a lapse of certain period, I'll exit. So there are always some kind of thinking about how do I exit into trade, what is the size of the trades, all these things. If you are doing getting into a trade without thinking on all these lines, then most likely it is more
Gambling.
kind of a gambling activity. Hello Gaurav, how are you?
Hi, bhaiya. I'm fine. How are you?
Good, good as always. So last time we studied about investing, right?
Yes, bhaiya.
So in that one, in the last class I just wanted to give you an overview, a basic introduction for you, right?
Okay.
Nothing
Okay.
going into the deep, but there
Mm-hmm.
were some important terms that we used. There was one was mutual funds, right?
Yes.
Investing in mutual funds, etc. So we also see advertisement on TV as well. Mutual fund
Yes.
sahi hai.
Mutual funds.
Sachin Tendulkar
And
promoting some
Dhoni.
kind of
Yes.
investing
Yes.
in mutual fund and various other stars, etc. So most people even don't know what mutual fund is. So it's a good idea to learn it. I am sure you have basic idea about it. You studied in
Yes,
your
bhai.
college what mutual fund is. Similarly, ETFs or exchange traded funds, we discuss it. So I want that we discuss them in detail as well. But
Okay.
before that, there were some queries regarding trading as a business, how it is different from speculation or gambling. You have certain queries in mind, right? So I have specifically prepared a presentation for you where I'll try
Okay.
to differentiate between various kind of this trading, investing, gambling, how they are different. So I am a trader for last 15 years. So people call us Satoria or some kind of
Yes,
speculator.
bhaiya.
And also how do we take it? What is my take on this? So I'll now start sharing my screen with you, and it's gonna be a very exhaustive and long session. So be prepared for it. Okay.
Okay, bhaiya.
Okay, done. So here we go. So investing a different perspective. Okay. So
Okay.
now I come to it. First thing we look is gambling versus speculation. What's the difference, right?
Yes.
You have seen my company punchline. My company punchline is speculation is our business.
Okay.
Yeah. So my company punchline is that. So how I what's the thought process behind it? I am going to share the basis of it. Gambling implies creating risk while none existed before. What is gambling? Gambling implies created risk while none existed before, right? You are watching a cricket match.
Yes.
Two teams are playing. Let's say it's a cricket match between India and Australia. That is being played for entertainment, right?
Okay.
Ultimately, sports is entertainment, right? There's no
Yes.
war fought between Russia versus, Australia versus India. It's just a cricket match. It is for
Okay.
entertainment. Okay, in a stadium crowd or people watching on TV, ultimately the winner takes the trophy, something like that. But beyond that, it is not so much, right? But
Yes.
then again, what you decide, you go to a particular website. Let's say some I don't want to take any name of a gambling site, but you log in into that and you put a bet of, let's say, $100 or 8,000 rupees or something like that. And now let's say you are betting on win for India. So before you put that bet, was there any risks to you? Whether Australia wins or India wins, Were you in any sort of risk or whatsoever? No.
Mm,
But now that you have placed a bet of 8,000 rupees, you have created a
yes.
risk for yourself.
Yes, very correct.
Let's say it's one is to one bet that you can win 8,000 or lose 8,000.
Okay.
So you have created an additional risk of 8,000. Although there is potential for win, but what you have created is so similarly like you are playing game of cards or you are playing a poker or some online betting game or whatever, something like that you are playing, or you are speculating on some event happening, some political event happening. That is, you are creating a risk. You are not it there was no pre-existent risk. So that kind of action is your gambling. Now read further. It says market speculation implies the transfer of pre-existing risk from one party to another.
Yeah.
Pre-existing risk from one party to another. Now how it happens, I'll tell you. Airline companies have their biggest expense on one particular head, is that is fuel. Fuel
Okay.
is their biggest input. Okay. So like one international flight might need few hundred tons of fuel,
Fuel.
jet, jet fuel, right? So just imagine a company, an airline company having hundreds of flights every day and maybe operating like 100, 200 aeroplanes. Kindly pardon me, just a sec, please.
Okay.
So, okay, sorry for
Yes, very problem.
taking a break. Yeah, we'll continue. So I was giving an example of an airline company. So a
Yes.
particular airline company might be using, let's say, 100,000 tons of jet fuel per month.
Okay.
So airline company, what it does, it books tickets in advance. It books tickets in advance, but jet fuel prices it has to buy regularly. It has
Yes.
to buy regularly every day, basically. So it
Mhm.
wants some kind of, and it is, and an airline company is booking tickets in advance for 3 4 months. So it kind of needs a price guarantee for fuel. Let's say airline company books a particular ticket for 10,000, keeping a particular fuel, let's say crude price is trading at $70 per barrel. Now suddenly there is something happens and crude prices shoot up to $110. Now all those tickets which were sold for 10,000 rupees, they might, when airline flies, they might be making a loss on those ones, right? So
Yes.
airline would like to offer good prices, keeping the present prices in mind. They are booking it. Let's say presently we are in July, they are booking ticket for September or October, but keeping present prices in mind. So how do they, the price risk of fuel oil? How do they control it? The jet fuel oil. How do they control it? Now at the same time, there are oil producers, they are regularly producing oil, so they are scared that okay, my extraction cost, etc., and this and that is, let's say, $50 per barrel. I want to lock in this $20 per barrel difference in this.
Okay.
So they want to protect from downward risk, and airline company want to protect from upward risk. So mitigate their risk both want to mitigate their risk. So they enter into a contract where one person says, okay, I'll sell you at $70 after 1 month, after 2 months, after 3 months, and other person says, okay, I'll buy at $70 after 1 month, after 2 months, after 3 months. So by this
Okay.
transaction, both the parties have eliminated their risk. Okay. So
Okay.
this kind of transaction is a futures transaction. This kind of transaction is a future transaction, which is between a producer and a consumer, now somebody who is not a producer or a consumer, that person also wants to take the risk. Let's say I'm well capitalized person, or let's say I'm a
Okay.
well capitalized organization, and I say, okay, I am ready to supply you at $70 per barrel. Let's say I'm ready. So I might be buying it from someone else, but since I am well capitalized, I am ready to take that price risk. For that price risk, if I am making, let's say, if I am making 5% earnings on that, so what is happening here? I am taking a risk, but for a return expected, for some kind of
Okay.
return expected, I am taking that risk. But at the same time, risk always existed. I am I am transferring the risk which earlier risk existed with the airline company. Now,
Yes.
Airline company has paid me some dollars. Airline company has paid me some dollars, and now that risk is mine. Similarly, what happens in banking? We were discussing forex, the OTC
Yes,
transaction
Gaurav.
in forex market.
Yes.
Forex market was, what is bank doing? What is bank doing? Let's say I have a 90-day LC, then I'll require foreign currency after 90 days. But my price is locked in today. Bank charges
Okay.
me a certain amount of premium. Bank charges me, let's say, 0.5% premium or 1% premium for locking those prices. So what bank is doing? Bank, being a professional organization, charges 1% of the fee. That might just be about 80 paisa on my $1. So for that 80 paisa, I am able to lock my foreign currency risk. And bank as an organization is taking that risk. So this is how speculative transactions are actually able to transfer risk from one party to another. Right? Yeah. For example, when two people enter into a bet, they create a risk situation. I already explained that. When a trader buys stock from another trader, they have just transferred pre-existing risk from one trader to another. No new risk in general is created.
Okay.
Gambling versus speculation, what difference? Speculation is an everyday activity done by about everybody. That is, we call speculation any human decision and endeavor that implies risk, but that could bring benefits, and that is based on the anticipation of events that could occur in the future. That we already discussed, right? About the airline and the forex, and also speculation is done by everybody. So in every business, some kind of speculation is there. It's like a businessman is speculating about certain amount of price rise, etc. This is all part of speculation. This is not gambling. A business person stocking something in anticipating that prices will go up, that is not gambling. That is just part of business, and speculation is involved in almost all businesses. Speculation, that sense of projection into the future, is one of the traits that many human beings differ from lettuces. Okay. So gambling, on the other hand, deals with moves in which the risk and the gain possibilities are created by the game itself. That's the main difference. There was no pre-existing risk. When you enter a card room, there was no existing risk.
Yes.
You enter and you are betting something on every draw of hands. Then what is happening? The risk is created by the game itself. You watch a cricket match, you place some bets. That is, again, you created it. You open an account in a popular some team building websites and all, and then you put money into it, and then you wait for your imaginary team to win and all. What is that? There was no risk involved. There was no team existing, but you create that team and put on some money, and now you have created a possible win scenario, and then lot of risk for yourself.
Yes.
So this is what gambling is. Probabilities are only indicative in speculation, while they are very precisely known in some types of gambling. Here is another potential difference. A speculator makes a trading decision based some time of analysis and can modify his risk and capital commitment to the trade through time. The gambler, however, once the bet is placed, is now an observer, and the rules of the game now control the outcome. Okay, so in some kind of gambling, if you have put your money on the table, like you have entered a cricket bet, either you can square off the bet in a liquid market, otherwise you cannot get out of it. Otherwise, you cannot get out of it. But let's say somebody like me trading in a financial market, I am speculating on some future transaction, or some kind of options trade. If I see my bet is going wrong, then I can get a stop loss and get out of the trade. I can shift my positions. I can move my positions up or down. So these kind of things are not generally available for a gambler.
Okay.
There are many games of chance. A professional poker player may actually approach trader status. He plays with a definable edge. I told you already about my liking for poker and how I play it on free websites and all. So poker gives you a very good learning into probabilities.
Okay.
How probabilities can change, and how a small edge in your behavior can create profitability for you. So poker is a good learning experience, but then again, poker is, again, it might be a game of skill. It might be a game of skill, but then again, it's also a game of chance. And when you are playing, it is I would say it is more of an entertainment than any kind of productive activity as far as poker is concerned. So we move to next. Regardless speculation, someone observed it is a process that relies on the analysis of a lot of economic and financial data, companies' financial report, political decision, information about management skills and aptitude, and the personal profile of the decision maker. Financier would call this as financial planning, budgeting, or investing. Finance is concerned with risk education. Speculation involves risk taking. When that risk taking is without any purpose apart from entertainment, it is gambling, right?
Yes.
So a speculator is necessarily doing it with some kind of purpose. A speculator has a role to play. Like a speculator has a great role to play of providing liquidity in the financial markets. So in, let's say, in futures market, there are hedgers. Like I gave you an example of hedgers. What is the example? Of oil producer on the one side, and airline company on the
Airline
other side.
company. Yes.
They both are hedgers. But they both meeting at the same time in the same quantity is highly unlikely. It is very
Yes.
unlikely that both parties have equal amount of requirements, the quantity, the period, etc. So to fill those gaps, who will come into picture? Speculators will come into
Speculators.
picture who will fill the gap. Yes, they will provide the liquidity. They will help the price discovery through exchange process. So this is where speculators play an important role. That's why speculator exists. That's why so many speculators play part in options, futures, commodity futures, and all. This is the role of speculators. Gambler do not play any such role. You are playing a poker game or a cricket bet. You are not helping any cricket game, or you are not helping anybody, or you are
Okay.
not mitigating risk of anybody. You are probably doing an entertainment. That is fine, but then again, such any such activity, risk taking done without any purpose apart from entertainment,
It
it's
is gambling.
gambling. Gambling, I would call it a gambling. So now we move on to, when does trading become gambling? Okay, this is very fine line. Trading can be trading and a business, can be trading can be just trading and a business.
Okay.
For me, it's a business, right? But it can also be gambling, and I see so many people who take trading as gambling. For them, the mindset is that of gambling. So, what's the thin line? There's a very thin line. I maintain that most traders are gamblers. They use market as a substitute for a casino. Here are some of the signposts that you have crossed the line. If you enter trades without a clear trading plan, you might be a gambler. For me, whatever trade that I enter, trade that I enter, I have reason to enter into that trade.
Okay.
I do not just enter just because I feel like. There has to be a whole thinking, whole process, a plan, a strategy, only on the basis of which I enter into a trade. Second part is, I have a clear exit plan, that okay, ऐसा हुआ तो ऐसा करूंगा, if this happens I'll do that. So I have plan A, B, C of exit. If I make profit, this is when I exit. If I make losses, this is when I exit. Or after a lapse of certain period, I'll exit. So there are always some kind of thinking about how do I exit into trade, what is the size of the trades, all these things. If you are doing getting into a trade without thinking on all these lines, then most likely it is more
Gambling.
kind of an gambling activity, right? So if you trade just to be trading, you might be a gambler. Just a second. If you trade just to be a trading, you might be a gambler. So few days back, I was part of a meeting. So this young gentleman told me that okay, I have a trading system, this and that. So he was actually having fulfilling first condition, that he had a trading plan and all. So now what he says, if I do not get a signal till 12 in the 12 till noon, till 12 o'clock, if I do not, my system do not generate a trading symbol, I have such a strong impulse that I take this. I always take some random trade.
Okay.
After
That is
till 12, if
gambling.
my system do not gives me a trade, so he had a compulsive behavior towards trading. That okay, my system has not given me trade, so I'll enter into some random trade and expect it to
Make
make
some
me some
money.
money. So what is this kind of behavior? This is compulsive behavior, or behavior of a gambler.
Yes.
If you are bored and enter a trade, you just might be a gambler. So again, similar situation. सिस्टम ने मेरे को नहीं दिया, तो मैं कुछ भी एंटर कर लेता हूँ, मजा आएगा, थोड़ा सा ऊपर नीचे
Mm-hmm.
जाएगा, prices will go up down, मेरा my M2M screen will show up and down, so it will be some kind of fun. It is more kind of placing a bet on a cricket match, I would say, no
Yes,
different.
bhai.
If you look at potential profit before assessing potential losses, you might just be a gambler. Clear? If you have no impulse control, you might just be a gambler. So, these are not some watertight things. You know, they are overriding each other kind of thing. Like somebody who's
Yes.
taking trade without risk in mind, without planning in mind, somebody who is taking impulsively just for the sake of it, somebody who watches something on TV or something on newspaper and goes into a trade without thinking when he will exit or something like that. This is all gambling kind of. If you have no methodology, you just might be a gambler. Again, same thing, like no
If
trading
you have no
plan.
system, yes.
If you rely on others for your trading decision, you might just be a gambler. भाई क्या लगता है,
हाँ,
ये शेयर अच्छा लग रहा है,
हाँ,
भाई इन्वेस्ट कर दूं, तू कहता तो कर देता हूं. If you say so, I can bet on this one. What is your view on this? Asking on internet forums, asking on WhatsApp messages, asking on Twitter people, what is your view on this? Can I buy more of it? Should I hold it on it? Calling these TV guys, CNBC guys. Hello, what is your opinion? I bought this share 6 months
in
back at this price. Now it is half price. What should I do? So this is kind of gambling behavior. If you buy something at XYZ price, at X price, then you should have something in mind that okay, if it decreases in value, I will go out, or if this news doesn't come well, I come out. So if you don't have a game plan, you are relying on somebody else. It is kind of a behavior of a gambler. If you do not take full responsibility of trading outcome, you might be a gambler.
yeah.
For me, the biggest learning part was that I took full responsibility. I never complained to my broker. Not that
Okay.
there were never issues, but I never said, if I make losses, I always say these are part of business. Brokers are going to have technical difficulties. Exchanges have technical difficulties. There have been days where exchanges have gone down. There might be some internet problem, that okay, there was heavy rain or just without any reason. There might be power failures. They happen even in why just in India? Even in top Western societies, they can happen.
Yes.
Why not?
Of course.
Technical defaults, etc. All these kind of things happen, natural calamities, etc. They all happen. So there is a possibility of power. I have seen it all over 15 years. I have seen all kind of power failure where I didn't get power for whole day or maybe till next day. Everything I have been through. Internet failures, exchange down, brokers not working. I'm not able to log in on my system. Staff is on leave. I am not having good health. There is some problem. There is some celebration in family. There is some bad news in family. All these things I have gone through, and trading is something that you have to live with all these things, and you have to keep in mind like this. So if you keep on complaining about this and that, then that is not taking responsibility. And those who do not take responsibility, I believe
Yeah.
there is a slim chance for them to become a good trader. If you increase your risk due to losses, you might just be a gambler. The averaging kind of phenomena.
Yes. You told me.
You enter in, you buy a share at 100 and then you buy more at 80 and 60, 40, this kind of behavior. Or let's say if you are losing 5 lakhs, then you say, okay, I have lost 5 lakhs, but this time I'll do double trading and I'll cover losses. Even I'll do 4 times the trading. Now, even if the smallest profit, that will give me 4 5 lakhs and then I'll recover. This kind of behavior is gambler's behavior. Keep on doubling the trade and something like that. So double or nothing kind of mentality is very detrimental for a successful trading career. If you do not use stop losses or do not adhere to them, you might be a gambler. Now somebody tells, okay, you must have a stop losses. Like every time TV wale, these guys, they always talk about enter into this and trade, some random trade they keep tell and they always tell a stop loss.
Yes.
So
I've
people
seen
think,
that.
okay, stop loss is the ultimate thing. So once you have a stop loss, you never can make a big losses. But no, it is not that simple. It is not that simple, and it is very easy that you are not able to place the stop losses because there is some overnight risk. Second, that you have placed the stop loss, but when you are nearing that stop loss, you panic and you withdraw that stop loss. Or it so happens that you had stop loss in mind, and before you went to put the stop loss, prices is sharply down. So
It
these
can.
things happen. So basically, if you have stop loss, then it means It has to be a physical, practical stop loss and not just a mental stop loss. And one of my favorites, if you get an adrenaline rush when you entering trades, you just might be a gambler. See, Gaurav, I tell you what, I do trading every day. That's my living. Okay, and there's a lot of staff workers who are working under me, following my instruction, punching in trade. I don't have any adrenaline rush. I don't feel anything if my screen is showing big profit or big loss, anything like that. My focus is that I have to follow the process. I have to follow the process. Having said that, I am not immune to any kind of emotion. I am not immune to any kind of emotions. For example, even after like 20 years of playing cricket, 20 years of playing cricket, Tendulkar was also affected by nervous 90s.
Yes.
Even cricket great, like so if he was affected by nervous 90s even after playing 20 years of cricket, I am just a very small human being in front of that legend. So if I say I don't feel any kind of emotions with profit or losses on screen, no, that is not true. I will feel emotion, I will feel the fear, the pain, everything I feel. But I am talking about the adrenaline rush, that kind of excitement that you feel, okay, I am trading, that is kind of gambler behavior. That you feel when you playing teen patti. That is when you
Okay.
that you feel when you are in a casino and using those slot machines and all, and you see those coin coming out and all. No, 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 no. That a trader should have a calm head. Okay, outcome will affect you, but outcome can affect you emotionally, but that effect should be minimal and you should always be in control. So investing versus speculation versus gambling. Investing is an attempt to forecast the yield of assets in the market. Speculating is an attempt to forecast the psychology of the market. I'll explain this. Investing is an attempt to forecast. Like I bought something at 100 rupees. So if
Okay.
I am buying something at 100 rupees, my attempt is that okay, and at the same time I know that the FD returns are 7%. Let's say. So I know my FD returns, but I am investing in a equity investment, some option, equity investment instrument, whatever. Like let's say for example, I buy Reliance share. I buy Reliance share, for example. So I might actually be expecting that Reliance share after 1 year, Reliance share will give me more than 7%. So I am, instead of investing in an FD, I am investing in Reliance share. So that might be, so here I am
Yeah.
forecasting the yield of Reliance share. So that is
Okay.
my investing thought behind it. But in speculative attempt, I can go long or short. So I am forecasting that okay, market might go up or down based on these kind of things and news flow and this. So this kind of psychology, this is speculative. Investor is a name given to passive investors. So somebody who invests now and then he checks in his investment after 3 months or maybe monthly, but he is not dabbling into market daily basis. So that is more, that kind of personality is more defined as an investor. But for someone like me who is doing it on daily basis, who is taking trades on daily basis, entering into trade, exiting from trade on daily basis, or very regularly, like once or twice in a week, these kind of activities are of a trader or a
Speculation.
speculator. Gambling involves the deliberate creation of new risk. Speculation involves the assumption of the inevitable risk
Inevitable.
that we already discussed. Psychologies of speculation and gambling are indistinguishable. Psychology with an appeal to fortune is considered a dangerously addictive habit. So somebody who wants to get rich overnight, somebody who wants to turn his 1 lakh into 1 crore over a short period of time, that kind of psychology is of a gambler's psychology. A speculator would believe that okay, I have got this kind of probabilistic edge. This is the purpose that my speculative activity is serving, and this is how I am going to make money. So that money might be limited amount of money, but his psychology is clear. His psychology is clear. So that that is that is speculative activity, but not gambling. Speculation is an attempt to defy odds in order to gain an amount greater than the average return of the market. Okay. So as a speculator, what I try to do with my trading
And
activity, I am trying to beat the market so that make an earning out of it. If market is, let's say, giving a certain amount of return, I try to work harder and try to gain more out of it. Gambling is an attempt to defy odds of outcome with negative expectation. Gambling has negative expectation, like say you are playing some kind of poker game on particular website. So
Okay.
that particular website, I mean that particular app or website, whatever you call it, on every winning head, that particular app is taking 5% of your earnings. So when you are losing 100, but when you are earning, if you earn 100, you only get 95. So if you do this activity over and over and again, after, let's say, if you play 500 hands, after playing 500 hands, it turns out that by this 500 commission that you kept on paying, you ended up paying up whole of your capital.
Okay.
So
But
even
when you
if
are,
you are net, like let's say if you won 100 hands, you have won 100 hands, and the total winning of those 100 hands was 10,000 rupees. Total winning of the, and you lost 400 hands, and total loss in your 400 hands was 10,000 rupees.
okay,
And you started with a sum of 500 rupees. You started with a sum of 500 rupees. Now what happens? The 10,000 rupees that you win, that exchange or that game app charges you 5% on winning hand. So they always gave you only 95% of your winning. So in your credit, you got 9,500. And when you lost 10,000, you lost
10,500.
all of 10,000. So after playing 500 hands, all your money is zero.
Okay. But
So
in
when
trading
odds are
also
so,
we pay. Yeah.
yeah, in trading also we pay brokerages. I'll come to that. So that 5% commission is actually a huge amount of commission, that just by playing 500 hands, you ended up paying so much. So to beat those odd against you, you need to have very good ability to gamble and make money. So out of those 100 hands that you won, you must be winning somewhere around 1,500, 15,000 to justify that kind of charges. So even in my trading, I have to earn so much that I pay salaries of my staff, I pay for various rents, I pay
Brokerages.
for various expenses, and I pay for brokers, and some various kind of electricity expenses. And also this kind of after making all these payments, then I take home some money. So I I am required not only just to win, but I must win enough to pay for all these expenses, and then I take home something. So it is a negative sum game, but I have to work so hard that my odds are so much in favor that I pay for the expenses as well, and not just the like what you call not just the brokerages, but several other things I have to pay. So this is again some kind of a tabular form of what we have already discussed. Speculation and morality. They will ask us see about intoxicants and games of chance. Say in both there is great evil as well as some benefits of man, but the evil which they cause is greater than the benefit which they bring. This is what Quran says. It is like a crapshoot in Las Vegas, except in Las Vegas the odds are with the house. As for the market, the odds are with you, because an average over the long run the market has paid. Because on average over the long run the market has paid off. Lot. So what I'll do, Gaurav,
Okay.
this is it for now. We'll take a break and continue from this quote. This quote from
Okay.
Quran. Try to quote what it says. Okay.
Okay. Okay.
Okay.